Hello and welcome back to Wealth Vigilante. Today we're diving into a topic that most people overlook, but the wealthy understand better than anyone else: how rich people legally avoid paying high taxes. You see, the tax code isn't written to punish the wealthy, it's designed to reward those who know how to use it strategically. And in today's video, I'm breaking down 13 powerful ways that rich people reduce their taxes, methods that you too can learn from. Let's get started. 1. Using business expenses as deductions. One of the biggest advantages of owning a business is being able to write off expenses. Travel, meals, vehicles, and even part of their home office. If it's used for business, it can reduce taxable income. Lesson: if you have a side hustle or business, keep track of your expenses. You might be able to deduct more than you think. 2. Investing in real estate for depreciation. Real estate investors love the tax benefits. Through depreciation, they can deduct the wear and tear on their properties, lowering their taxable income, even if the property is appreciating in value. Lesson: buying rental properties can provide tax benefits that the average person renting an apartment will never get. 3. Using long-term capital gains. When you hold an investment for over a year, you pay a lower tax rate on your profits compared to short-term gains. Rich people structure their wealth around assets that grow over time instead of relying solely on high-taxed salaries. Lesson: invest for the long term and take advantage of capital gains tax rates. 4. Borrowing against assets. Instead of selling, the ultra-rich don't sell their assets to access cash, they borrow against them. They take loans using their stocks or real estate as collateral, avoiding capital gains taxes while still getting liquid money to spend. Lesson: if you have valuable assets, consider borrowing against them instead of selling to avoid unnecessary taxes. 5. Using retirement accounts to reduce taxable income. Contributions to retirement accounts like a 401k or IRA can lower taxable income. The rich max out these accounts to let their money grow tax-deferred. Lesson: even if you're just starting out, take advantage of tax-advantaged retirement accounts. 6. Setting up trusts to protect wealth. The wealthy use trusts to pass down assets to their heirs while avoiding estate taxes. These legal structures allow them to control how their money is distributed while minimizing tax liabilities. Lesson: if you're planning long-term wealth transfer, a trust can be a game changer. 7. Moving to tax-friendly states. Many wealthy individuals move to states with no state income tax, like Florida, Texas, or Nevada. By simply changing residency, they can legally avoid paying thousands, sometimes millions, in state taxes. Lesson: if your income is growing, consider how your location affects your tax bill. 8. Donating to charities for tax write-offs. Rich people donate to charities, not just because they're generous, but because they can write off those donations and lower their taxable income. Some even set up private foundations to have more control over how their money is used. Lesson: if you donate, make sure to track and report it for tax benefits. 9. Hiring tax professionals to find loopholes. The wealthy don't file taxes on their own. They hire top-tier accountants and tax attorneys who find every legal loophole available. The fees they pay for these experts are nothing compared to what they save in taxes. Lesson: a good accountant can save you far more than they cost. 10. Using health savings accounts, HSAs, for tax-free growth. HSAs allow people to save money tax-free for medical expenses. The wealthy max out these accounts, let the money grow, and use it for future healthcare needs, all tax-free. Lesson: if you have access to an HSA, use it. It's one of the best tax shelters available. 11. Holding investments in tax-advantaged accounts. Rich people keep their highest taxed investments inside tax-free or tax-deferred accounts. For example, putting dividend stocks inside a Roth IRA can eliminate taxes on the dividends altogether. Lesson: be strategic about where you hold different types of investments. 12. Using 1031 exchanges to defer real estate taxes. Real estate investors use the 1031 exchange to sell a property and reinvest the profits into a new one, without paying taxes on the gains. They keep rolling their money forward, deferring taxes indefinitely. Lesson: if you're in real estate, learn how to use a 1031 exchange to avoid paying capital gains taxes. 13. Passing down wealth. Tax-free with step-up basis. When someone inherits assets like stocks or real estate, they don't pay taxes on all the past gains. Instead, the value resets to the current market price, eliminating capital gains taxes entirely. Lesson: understanding how inheritance laws work can save your family millions in taxes. And there you have it. 13 ways the rich legally minimize their taxes. The biggest takeaway? The wealthy don't just make money, they learn how to keep it. The tax system rewards those who understand how to use it to their advantage. If you found this valuable, hit that like button, share this with someone who needs to hear it, and subscribe to Wealth Vigilante for more strategies on building and keeping wealth. Until next time, stay smart, stay strategic, and as always, stay vigilant.